Welcome, everybody. My name is Mary Newman, and our speaker is Johnnie Davis. Johnnie is a board member and a survivor of heart failure and cardiac arrest. Um, he is the owner and founder of Davis Group Enterprises. He is an inspirational speaker with a best-selling author. He wrote the book I'm Still Here, From Heart Failure to Heart of a Champion, and that's the #1 on Amazon. Hey, just happened to have it. Good. And he's one of 25 co-authors of the book Cardiac Athletes, also on Amazon. You can hold that one up? Yeah. Okay, great. He's been featured on many different TV stations and was on the cover of Health Monitor magazine. He's a Rutgers University graduate, originally from Newark, New Jersey, now living in Charlotte, North Carolina, with Rachel, his wife, and Jackson, his new son. And yeah, that's kind of an overview, but he's very knowledgeable about life insurance, and so we hope that this is a helpful forum for you, and we'll have plenty of time for questions.
Awesome. Thank you so much. And welcome, everyone. Can you all hear me? Give me a thumbs up if you can. That'd be great. Awesome. Awesome. Well, Mary, thank you so much for that warm introduction. And it's my honor and privilege to be with all of you today to share with you this information about life insurance and how we can all benefit from it as survivors. And this is something that's near and dear to my heart because when I was diagnosed with heart failure back in 2006, I fell into that uninsurable category and I was walking around uninsurable for so many years and it just was not a good feeling. And it didn't matter what company I applied for or applied to, the answer was always no, 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 no. And then once I actually got into the life insurance space again, I really wanted to find some different options for people that fell into that category just like myself. And so as soon as I was able to find these different options, I immediately took advantage of it for myself. And I began to share with other people in the community and in the heart community and share with them the different options that are available. So it's not like it was back in 2006. We do have some options available. And I would imagine and envision more options becoming available as time continues to go on. So I'm going to see if I can share my screen here, Mary, and
Okay.
and we can start. And if you can all see that, let me know. Guys, thumbs up. You can see it. Okay, perfect. All right, so let's talk about understanding, heart conditions. And so, according to the CDC, heart disease is the leading cause of death in the United States, affecting over 697,000 people a year. And when we talk about these different types of heart disease and heart illnesses, let's talk about the chronic and critical illness. And this is very important because this is the area that disqualifies many people from being eligible for coverage. What is a chronic illness? A chronic illness means that a doctor has certified within the last 12 months that an insured is unable to perform 2 of the 6 daily activities of life without assistance for a period of at least 90 days. So we're talking about clothing, bathing, toileting, dressing, eating, continence, and transferring, or is cognitively impaired. And here are some examples of that: systemic lupus, Parkinson's disease, kidney disease, heart disease, and heart failure. And now let's examine what a critical illness is. So, critical illness is a life-threatening medical condition that requires specialized treatment to support vital organs and prevent death. Examples of that: ALS, blindness, cancer, cystic fibrosis, heart attack, major organ transplant, stroke, or sudden cardiac arrest, heart valve replacement. If a person were to apply for a life insurance policy immediately after being diagnosed with one of these illnesses, the likely result would be an automatic decline. And so, as you can see from this illustration here, heart failure, arrhythmia, coronary artery disease, and sudden cardiac arrest, these are some of the major illnesses that would automatically disqualify a person if they were to immediately, and when I say immediately, I'm talking about within that year's time, or even sometimes within that 2 years' time of applying for a life insurance policy, you would automatically decline. Okay, so the role of the ICD, we know that for those of us who have them, I have one myself. Studies show that ICDs can reduce the risk of sudden cardiac arrest death by 30 to 50%. And this is great because now, and I'll talk about this later, individuals like myself and others who will watch this or who are watching now, if you have an ICD, this does not automatically disqualify you now for being eligible for coverage. I've had mine now for going on 12 years. And so I'm far beyond the time that would consider a person from being disqualified. So let's talk about the life insurance basics because this is something that really comes up a lot when people are really trying to understand life insurance. You know, sometimes people, when they get coverage, they'll have coverage either on their own through their own individual policy, or they'll get their coverage through their job, or maybe their spouse works at a company and they're able to get a life insurance policy through their spouse's place of employment. And so it falls into two categories. The first is term life insurance. And so term life insurance, basically, this is considered not to be permanent insurance because it only covers you for a certain term. And that term is usually anywhere between 10, 20 to 30 years. The premiums are generally lower because it's not permanent insurance. And the younger you get the term policy and the healthier you are when you apply for the policy, the lower the premium is going to be. So there's no cash value accumulation with this. It only pays out if the death occurs within the term. Now, here's the thing about term life insurance policies. 98%, excuse me, 95% of the people who get these policies, they outlive them. They outlive their terms. And so, again, this is the reason why in many instances the premiums are lower because they're for a specific time, but keep in mind that most people will outlive these policies. Now, they may be renewable, but they're going to be renewable at higher rates. And the reason why is because you're going to be 10, 20, 30 years older. So when you apply for life insurance at 60 or 70 years old, of course, those premiums are going to be astronomical because of your age, and you may have to show evidence of insurability. The investment component, there is none. It's purely insurance. There's no policy loans. You can't borrow against it. And it's ideal for temporary needs, such as a mortgage or an education. Give you an example. So if you ever apply for mortgage protection, or if you ever heard the term mortgage protection, basically that's a term life insurance policy that the owner of the home will get on themselves or a spouse to cover the term of that mortgage. And so most people, if you have a 30-year mortgage, or if you have a 15-year mortgage or a 20-year mortgage, however it's structured, you get a term policy that matches that. And so if that person were to pass away within that 15-year, 20-year, or 30 years of that mortgage, the benefit would pay to the beneficiary, and the beneficiary could then use that money to pay off the home or whatever associated expenses are, with that house. There's really no flexibility because it's just straight insurance, and so it's a fixed term for a fixed amount, and that's it. And the tax benefits are usually death benefits are usually tax-free. Now, whole life is a completely different animal altogether. This is considered permanent insurance because it will stay with you during your entire lifetime, provided you continue to make the premium payments. The premiums are higher because, again, it's a lifelong coverage and it builds cash value over the life of the policy. It's guaranteed payout upon death, regardless of when. It's permanent. The coverage continues as long as the premiums are paid. It includes a savings and investment component. So this is another reason why people sometimes opt to get the whole life policy because it does accumulate cash value. You can borrow against it. So as the policy is starting to accumulate cash over the years, You can then borrow against your own policy and still continue to keep the death benefit. Now, you have the ability to borrow against the policy and use that money for whatever you want to use it for. That's considered a benefit, a living benefit. So you want to use the cash value while you are still alive. Now, there's lifelong protection for the cash value growth. There's more flexibility. You can actually adjust the premiums and coverage over the course of time. And of course, the death benefit and the cash value growth are generally tax deferred. Now, here's one thing I want to point out about the cash value. Cash value has to be used while you are still alive. If you, say, for instance, have a $1 million whole life policy and you've accumulated $800,000, just using this as an example, $800,000 in cash value, and you've never used it, and you were to pass away, your beneficiary would not get the $800,000 in cash value and the $1 million in death benefit. Your beneficiary will only receive the 1 million in death benefit. And the reason being is because the cash value is for you to use while you're still alive. So if you don't use the cash value while you're still alive, then whatever is accumulated in that, it just goes back to the company. That's it. So if you have a policy like that and you're accumulating cash value, use it for whatever you want to use it for. You want to make a down payment on a home, you want to use it for your children's tuition, so on and so forth. This is typically what people use life insurance policies for, whole life policies. So I just want to point that out. So a couple of factors that will determine your eligibility: your age, number one, your health status, your lifestyle, and there's one more factor, the type of policy that you actually want to get. So do you want a term policy, or if you're looking for a whole life policy, that will determine what you're going to be eligible for. So the underwriting process is relatively simple. You fill out an application and there's a medical examination that you must take. Now, this will depend on, the medical examination depends on the amount of coverage that a person is actually applying for. So if you're applying for, let's say, $1 million or more in coverage, many companies would request a medical examination in which a nurse will come to your home, they'll draw blood, and they'll take your vitals and such, and they'll record that information, and that goes into the underwriting department, and that's all part of the risk assessment. So when you fill out the application and you fill out the medical questions, that's all included in there. And if it's approved, then you'll receive a policy offer. Now, here's something that you want to consider, that 85%, this is approximately now 85% of applicants with heart conditions receive coverage, albeit sometimes at elevated premiums. And so, again, as I mentioned at the top of the call, in 2006, this was pretty much anyone who had a devastating or debilitating heart issue, you would not be eligible for coverage at all. But things have changed and it's on a case by case basis. Okay, it's not a one size fit all deal. And so you want to find the right coverage. You want to speak with or consult with the experienced agent. So those of you who have questions, if you would like to speak with me offline, we can definitely do so. Or if you have an agent that you're working with or know of, you can definitely consult with them and see what you are eligible for and see some of the other carriers out there that are now offering different types of policies that some carriers don't. So you want to compare multiple insurers and also read the reviews and testimonials. And so this graphic basically speaks to the premiums of healthy individuals versus individuals that have heart conditions. And so when you have your standard premium, now again, if you're looking at from a healthy individual standpoint, if you're looking at these premiums, 500 both here, these represent individuals who have a large death benefit. If you're paying $500 a month for, let's say, a term policy, then your death benefit is really high. Usually it's going to be well over $1 million and such. Over here, individuals with heart conditions, they're paying the same amount of premium, but their death benefit may be a lot lower because insurance companies, believe it or not, are not in the business of paying huge amounts of death claims for individuals they know are high risk. So they'll allow us to get insurance, but the death benefit may have a cap on it where you can't necessarily qualify for the 2 million, 3 million, or $1 million policy, and you already have a major heart issue. So we can get coverage in many instances, but those premiums are going to be a lot higher. Now, this is where many of us are going to fall into the category when we talk about the alternative options, because what I just shared with you before, those that's relatively for people who have no health issues, they're relatively healthy, or if you have an issue, it's not something that's going to be considered a knockout, as to use an insurance term. So many of us will fall into this category where we are eligible for what we call final expense policies. Now, final expense policies are whole life policies. They're smaller whole life policies, and those policies, the benefits usually range. The death benefit ranges from $30,000 to $50,000, and that depends on your age in terms of the maximum amount that you can qualify for. So that will solely depend on your age. Now, there's no medical exam required for final expense policies. You simply just fill out the application and they underwrite it based on the medications that you're taking as well. And so for many people between the age of 50, or I should say 40 to 85 years old, those are the individuals that are eligible for final expense policies. And so when I discovered that this was something that was possible, I actually applied for it immediately because I had no coverage at all on my own. And so I had multiple final expense policies on myself now that I couldn't get before. Now, this right here, the guarantee issue, this is the policy that many people are going to fall into this category as well. Guarantee issue whole life policies, these are whole life policies, and these are for people that are between ages 50 to 85 years old. So if you see those commercials that come on and you hear Jonathan with Colonial Life, and they're talking about how you can qualify for life insurance coverage. There's no medical examination required. You can't be declined at all for any reason at all. And that's because this is a guaranteed issue life policy. There's no medical exam, there's no medical questions, and it's a 2-year return of premium. So basically, what that means is if you're between the age of 50 to 85 years old, say for instance, you have multiple situations going on. You have a heart issue and you have diabetes, which is considered, you have two chronic illnesses that would basically consider you, that would be an automatic decline in most carriers that you apply for. It's an automatic decline. You can apply for a maximum amount of coverage, which normally does not exceed $30,000. You're automatically approved for it, but the 2-year return of premium stipulation states that if you were to pass away within 2 years of applying for that policy and being approved, and it was from natural causes, all of the premium that you paid into that policy would be paid to your beneficiary plus 10% on top of that. Now, if you were to pass away beyond the 2-year threshold, or if you were to pass away by accident within that 2-year period, then the full death benefit will pay out. So this is the policy that I got for myself as well, because before I was eligible for this new policy that I'll mention to you guys in a second, I got this policy because, again, I was limited on my own personal options. And so I'm well beyond my 2-year return of premium. So if I were to pass away today, Rachel will get all the death benefit and be able to have enough money to pay for funeral expenses and such. And this was a peace of mind for me because it was better for me to have something as opposed to nothing at all. Now, for those of you who have policies with your employer, or if you have coverage because your spouse is working and you don't have coverage because maybe you're an entrepreneur or you're doing something else, they don't offer benefits at your place of employment. When your spouse leaves that job, when they retire from that job, the benefits are going to stay there with them. And so it's always best. I always recommend people to get a policy on your own while you still can, because when you retire from the job or when your spouse retires from that job, the life insurance benefits are going to remain there. Now, there are certain positions that people have, certain jobs that they have in which they may be able to take the life insurance policy with them, but it's not going to be the same amount of coverage that you had on your job. So I'll give you an example. Most people, if you work in a corporate environment, they will give you a policy multiple, and the policy death benefit will be, let's say, 5 times your salary or maybe 10 times your salary, and that's it, without requiring any without requiring any medical examinations. So if you make $200,000 a year, they may say, well, you can get 5 times your salary and that's it, or maybe 10 times your salary without requiring any medical exams. And for your spouse may have a $25,000 max or a $50,000 max, and that's it. So as long as your spouse, as long as you both are working, you have that coverage. But when you retire, or when your spouse retires, or when you change jobs, that coverage is going to stay on the job. So if you have no outside coverage, then you are putting yourself at risk, because no one's going to stay on the job forever. And you got to keep in mind, you're getting older and your life situation is changing. So you may have gotten that coverage, got the life insurance policy when you were fully healthy. 3 years into your job, or maybe 10 years into your job, you had a stroke or you had a heart attack, and God forbid, and God willing, you were able to go back to work, but your life status has changed. You have these health issues that are in your medical information bureau, in your the Milliman report. So now, if you go to apply for coverage outside of the job, you may not be able to get the same policy that you have on the job, because your life situation has changed. And just because something happened to you on the job doesn't necessarily mean that they're going to disqualify you from having coverage on the job. So if you have your policy now, you're grandfathered in. If anything happened to you, you're grandfathered in most instances, in most cases. In most cases, I have heard people that have gone through situations where, they had a sudden cardiac arrest. They survived, thank God. But for whatever reason, they were now not eligible for life insurance coverage at the job anymore. I have heard of situations like that, but it's very rare, because you have coverage, your wife has coverage, or your husband has coverage. As long as you're still alive and they're still paying, they're still deducting it out of their check or your check, the coverage should be intact. But with that being said, for the vast majority of people who may not be in that situation, you're going to fall into one of these two categories. It's either going to be a final expense policy with a $50,000 max, or it's going to be a guarantee issue whole life option. And this was not available for me back then, back in 2006. And many of you may have gone through a similar situation where you were applying and you were denied as well, because you didn't have this option. And I'll give you guys an example of this one. This is really good, because a friend of mine, she was diagnosed with heart failure. We went to college together, and she was able to get $50,000 max after being declined, and she applied for the regular whole life policy. When I say regular whole life policy, I mean a higher death benefit. That's an automatic decline for that, or a term policy. And she was declined. And so she came to me, and I was able to find her a policy with a carrier that I write for $50,000. And she was able to get that coverage right on the spot. They approved it right on the spot, and it was same day coverage. Meaning, same day coverage means that the day that that application gets approved, your policy now becomes effective, and there's no 2-year return of premium. So if she were to pass away within 2 years from natural causes, her beneficiary would receive the full death benefit, because it's same day coverage. There was no 2-year return of premium clause. So there are certain instances depending upon what your diagnosis is, the medication that you're taking, how long you've been taking that medication, how long you've been dealing with heart failure, how long it has been since you've had sudden cardiac arrest, or any other illnesses that you may be dealing with. It's a case by case basis. So it's no longer, it's not a one size fit all deal. And just because one person was declined doesn't mean that you will be. Just because another person was approved for something doesn't mean that you're going to be approved for that as well. So it's best to speak with your insurance broker or your insurance agent and share all of everything that you're dealing with in terms of your health. Get a risk assessment before you even fill out the application, so that way you know what ahead of time what you're dealing with before you even apply. So that would be my recommendation for anyone right now who's looking to get an insurance policy, to go that route as opposed to just blindly applying for different coverages and you're getting declined, because that's not good. It's not a good situation to apply for multiple carriers and to have decline, 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 decline. It's not a good situation to do that. It's sort of like if you were applying to buy a car, or and every time someone checked your credit to see if you're credit worthy, you got a ding. It was a hard check on your credit, and now your credit score is going down, down, down because you've had so many credit checks. That's what it's like when you apply for multiple policies and you get a decline, 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 decline. So carriers don't like to see that. So it's best to speak with an experienced broker or sales agent who can kind of help navigate those waters for you. And last but not least, I want to talk about the living wills. There's a lot of us uh, who don't have these documents in place. And this is something that I help people with on a daily basis as well. And many of us who've all been hospitalized at some point in time, the first question that the nurse or some of the person on the medical staff will ask is, do you have a last will and testament? Do you have a durable power of attorney? Do you have a physician's directive? So on and so forth. And years ago, I was thankful I was able to say, yes, I have these documents in place. But many people do not have these documents in place. And it could, some of these documents can be quite costly. Um, some of them you can probably find where to do it on, I don't know, some other type of legal program or what have you. But I can show you through a company that I work with how to get these documents created and set up for you at little to no cost at all. So for anyone who's interested in getting their last living will and testament, durable power of attorney, living will, physician's directive, and revocable living trust, we can get that taken care of as well. So Mary, that is the end of my short presentation here. So if anyone has any questions, I'll be happy to answer any questions that you all have.
When you mentioned about getting a risk assessment, who does that? The company will send somebody or?
No, so when you're doing a risk assessment, so say for instance, if I were you wanted a policy, and I would ask you a bunch of questions, and then I would contact, this is what I normally do. I contact the underwriting department myself, and I would say, I have this client, this age, this is what she has, these are the medications she takes, so on and so forth. This is how long she's been dealing with X, Y, and Z. Would she even be eligible for coverage before we even start the application process? And they would run it through the risk assessment and they'll let me know, yes, you can go ahead and submit the application, or no, she wouldn't be eligible for this, but she can apply for this.
Mhm.
So to answer your question, the insurance company would do the risk assessment, but you would facilitate that through the broker or the agent that you're working with.
John and Matthew, do you have any questions?
Yeah, I've got a question. This is John. Johnny, I was I had sudden cardiac arrest age 50. It's been about 5.5 years now,
Mm-hmm.
almost 6 years. And I ended up getting life insurance through Pacific Life.
Mm-hmm.
Um, it was, believe it or not, I kept hearing these Big Lou commercials on Fox News. I don't know if you've heard Big Lou. He's like, if you've had all these medical issues, you can still get insurance. Anyway, I called them and they're a broker. So they found the policies, but they're terribly expensive. I pay a lot. And I was stuck with that. I was like, that's the only people that are going to underwrite me. And that's all I can do. But I thought at about 5 years, I thought, well, surely now at 5 years and 55, surely I can kind of go back to the well and I should give me some credit I don't have an issue. I mean, I had sudden cardiac arrest. I have no heart damage. I just had some flaky plaque and, just clotted and, I dropped dead, but I'm good. I have no issues. And I went back to him and he said, well, now you're of the age where it's going to be about the same anyway, because now I'm, almost 50, I'll be 56 in January.
Mm-hmm.
So, I mean, does that feel or sound pretty accurate? I mean, yeah.
Yep. Yep. Okay. That sounds pretty much pretty standard at this point. And it's because, again, as I said in the webinar, you just because you had these things happen to you doesn't necessarily mean that you are not going to be eligible for coverage, but the premium may be astronomically higher.
Yeah.
And it's because of the sudden cardiac arrest itself. Do you have an ICD?
No, I have nothing. No,
Yeah.
I have a stent. I have a stent in the widowmaker, the left anterior descending artery, and that's it.
Okay. Okay.
And I think they put that in there just because he estimated I was only 30% blocked. He said I just had a little flaky incident and I clotted, and so it shut me off at that point. But I really don't have any issues. I don't have any heart damage. I had more head damage, from my concussion, because I'm almost 7 feet tall, and I just dropped dead while I was walking. I hit the sidewalk, just landed right on my head, and that was probably a bigger issue than the the heart. But
wow,
long term.
Do you have a term or whole life?
I have a term. I have two separate policies.
Mm-hmm.
Kind of layered them in, and so I have one that I did probably at 50. I think I'm good through their 20-year level terms through like 70 and 72. I got 2 million total.
2 million in total?
Yeah, but I pay over $1,000 a month for those.
Yeah, and that's about right.
Okay.
All right. So just like I said,
going back through you, it's probably going to be the same kind of situation. I'm just stuck.
Yeah.
Okay.
Yeah. Yeah.
Darn. I hate it. Makes me want to die before I'm 70.
Well, you can't use it. It's for your death. It's for your beneficiary. So we need.
I know, but I know. No, I want to make sure they get it.
Yeah, 100%.
Oh man,
100%. Well, keep in mind, John, that outside of anything else that you may be dealing with from a health perspective, 95% of people who get term policies, they outlive them.
Yeah, yeah.
Now the premium that you're paying right now, if you think that's expensive, if you were to get a whole life policy for that same amount of death benefit, it would be the cost of a mortgage.
Oh yeah, yeah. No, I had a whole life when this happened. I got it converted. I was paying like $30,000 a year for that.
Yeah,
it went up when I had the cardiac arrest. It was crazy.
Yeah, it can be quite costly, but but at least you're in a position where you can pay for that. You can afford that. There's many people that cannot afford that, and there's many people that would not even be eligible for it at all. But so the other options that I shared with you during the presentation, those are available. Now, again, it's not going to be a situation where people, like in your case with your policies, I mean, if you were to pass away, your beneficiary, they're going to be set for life. But in many instances, we have people that are passing away and don't even have enough to cover funeral expenses or anything. And so you see people circulating GoFundMe's and things on social media or having some type of fundraiser in their community to help people pay for expenses. And uh, people don't have to be in that situation because we have other options to at least cover those things. So
Yeah, yeah, yeah. That's very sad. Yep.
yeah, but yeah,
That's
but but yeah, you're just about where you should be with your
okay.
policy.
All right. Thank you.
Absolutely.
Matthew, do you have any questions?
I do not, but thanks for asking, and I appreciate you guys sharing the information. Uh, Certainly, always appreciate these informational sessions you guys put on. And I know, Mary, we talked about this, I think, maybe a year and a half ago about insurance because I was in the healthcare space, but not necessarily in the life insurance space. So certainly was glad that Johnny could share some light on what's available to survivors.
100%.
Yeah, thank
And if
you.
anyone is interested, I'm actually licensed in New Jersey, Pennsylvania, Virginia, Maryland, North and South Carolina, Georgia, Alabama, Florida, Texas, Connecticut, Arizona, and Nevada.
Wow, that's something. Not Montana, though, huh?
No, I have no clients in Montana.
So if you had to guess, Johnny, like, I mean, this is probably something you couldn't really answer, but what percentage of sudden cardiac arrest survivors would possibly have life insurance? Any idea?
Oh, if I had to just guess, uh, I couldn't even give you an accurate a number. That's something I would actually have to research. I would want to do that before I give you an answer because
Okay.
I get it off.
Maybe you can send out a poll, Mary.
Yeah, we want to send out a research study to members of CASA and ask a number of different questions, such as, do you have life insurance, and if what were your circumstances and that sort of thing.
And I'm also an independent. I'm just a consultant, an independent contractor, and I use MetaShare, one of these,
Mhm.
sharing things for insurance. And I just like a high deductible, low premium. But most of those programs will exclude anything related to a heart issue. So I just decided ultimately it was just too risky to, if I had another, some other heart issue that would be excluded, and that could be, those can be hundreds of thousands of dollars real quick. So I thought it wasn't worth the risk, and you have to go to the Obamacare, which is so expensive. I mean, just so expensive. But yeah, you're just one of those things. You're just stuck. That's what you got to do. So um, hopefully nobody's not getting medical insurance because of issues like that. But that would be bad too.
And medical insurance is a completely different. Uh, that's a completely different can of worms. Um, and I'm not. I do have a health insurance license. I don't write in the individual health insurance policy. But that's a completely different topic for a different day. So, any other questions, anyone?
Hey Johnny, I would be interested in seeing this. I assume it's just an outsourced legal type of company you're suggesting for things like advanced directives and the like. I've got all that done, but I've got some siblings that in their 50s too that haven't done that, and might
Yeah,
recommend it to them.
yeah, absolutely. Where are you located, John?
Kansas.
Yeah, absolutely. Yeah, we company that I work with provides all of these documents, legal protection, and all these other documents
Hmm.
uh, for members at no cost. So rather than paying hundreds of dollars, or if an individual is interested in setting up a trust, a trust can start off anywhere between $2,500 to $3,000 and more, and it can get really expensive when you're setting up trusts, depending upon how much assets a person has. Um, we can help individuals get these documents created at, like I said, little to no cost.
Okay.
And is that better than something like LegalZoom?
Yes.
Okay.
Yeah, those have no flexibility. If you have anything just that's not just rote, standard stuff, they don't work. I started with that, but they don't work.
It's 10 times better, 10 times more effective than LegalZoom.
John Chaney, do you have any questions?
No, I just tuned in late about 5 or 10 minutes ago.
Unfortunately, everybody that showed up on time got a $1 million life insurance policy for free.
Yeah, I'm sorry I missed out on that.
Yeah, bad.
Yeah, so what's the what did I miss? What's the bottom line on being able to obtain life insurance after having a sudden cardiac arrest? You get a guaranteed issue. Is that what we're talking about here? A guaranteed issue graded benefit policy?
That's one of the options. We talked about that. We talked about some other options that are available. It all depends on, too, how long ago the sudden cardiac arrest was. It depends on how much coverage you're looking to get. But we definitely did cover that guarantee issue graded option as well. And
And
that,
what would
I'm sorry, go ahead.
I was just going to say what what other options would there be?
Well, so you have the final expense option as well, that would a person would be eligible for. That's not necessarily a guaranteed issue policy. It's a whole life policy with a limited benefit of 30 to 50,000, depending upon the person's age, and based on their current health issue, based on their current health status, determine whether or not they will be eligible for same day coverage versus a 2-year return of premium. So that's another option as well. And the example that I use is, I have a friend that I went to college with. She's 50 years old. She was just recently diagnosed with heart failure, and that's the only ailment that she has. And so after applying for a regular term policy and a regular whole life policy, she was declined. And we talked about, if a person has been diagnosed with one of these chronic illnesses, if they were to immediately apply for a term or whole life policy, and the benefit that they were looking to get was 100, 200, $300,000 or more than likely they're going to be automatically declined. But the carrier that I write for, she was able to get $50,000 max, and it was same day coverage, and there was no 2-year return of premium. So it's a case by case situation. It's not a one size fit all deal, but there are definitely some other options available to people, but it's an individual thing.
No doubt very expensive.
Well, in her case, I mean, she was able to get it for, I think her premium was like $136 a month
For
for $50,000, 50 years old. And women are always rated lower than men. They always have lower premiums because men have a lower life expectancy. So the premiums are always going to be higher for men than women. But for her, that was right within her budget, and it's a really good policy, considering she couldn't get anything else at all. She was declined everywhere else she went.
Well,
So if you guys,
I was going to
I'm
say
sorry,
we're
go
recording.
ahead.
I was going to say we're recording this session, but maybe Johnny, you can also share. We can put up your slides separately because that was a really good presentation that you gave.
Yeah, definitely. I can definitely do that. So, all right, Mary, if there are no questions or additional questions, I'm going to sign off so I can go and pick up my little guy.
Yeah,
Thank
I'd be
you.
interested in seeing the slides, so I missed them.
Okay, excellent. I'll definitely will make those available to everyone.
Right. Any other questions?
You're
Well,
welcome.
thank you so much, Johnny. This was amazing.
Well, thank you. I
Really good
appreciate the
information.
opportunity to share with everyone.
Mhm.
And if anyone wants to talk to me offline, feel free to reach out to me.
Okay.
Thank you, Johnny.
All right. Have a wonderful day, everyone.
Thank you.
That's it.
Bye.